All right. All right. So thank you guys so much for coming to I think this is our third or fourth session of the First Gen College Planning Workshop Series. My name is Nicole Mitchell. I'm the College and Career Counselor at Norristown Area High School. And so if you've missed any of our sessions, this will be loaded on our YouTube page. And there is a special channel that says, or playlist that says First Gen College Planning Workshop Series. And so in this series, we have been learning a lot of information for families who are sending their students to college. You're the first person in the family to go to college, or you went to college 1,000 years ago. And things have changed since then. And actually, things have changed in the last 3 to 5 years. And now with COVID, stuff is changing every year. So it gives you an opportunity to learn some definitions and really ask some questions. This is a safe space, so no question is a stupid question, even if we just answered it 5 minutes ago. All right, we want to give you guys a safe space so that you can ask any questions and get answers to get prepped for next year or the year after. So real quick, if you look at the screen, these are the quickest ways to get in contact with us at the College and Career Center. My email address is here. I live on Instagram. And so we put a lot of advertisements and upcoming events on Instagram. You can follow us there. Here's our Schoology account, so you can join by grade level, because we also post information and scholarships, especially for the seniors there. And then you have our YouTube and our website. And if anybody wants to schedule an appointment with me, you can just click that link down at the bottom, and I'll put that in the chat, but it goes directly into my calendar, so we don't have to email back and forth. Are you available Thursday, Tuesday, what time, all this kind of stuff. You just click the link and it goes right into the calendar. And then here we have our last 2 dates. So the last 2 dates is Tuesday, April the 26th and Tuesday, May the 24th. How to make sure the college is a good fit. And in that session, we also will add just a little bit more of some financial aid items. You guys are going to be doing financial aid basics today, but I'm sure there's a couple of things that we normally would share with you that probably won't be in this presentation. So I'll take some good notes and make sure we share it in that presentation, but I'm sure they'll cover 95% of what I was going to tell you anyway. And then on May the 24th is this experience and expectations of being a college student. And so in this session, we're going to give you guys some advice about how to best communicate with your student when you go off to college, and just some things that will make that experience much better, to ensure that the student actually is able to stay in school. All right, so I'm going to stop sharing my screen. And at this point, we want to introduce our special guest from Citizens Bank. And so we have Asamase Ekatar, and we also have Miss Katie, and I keep wanting to call you Welsh, but I have another Katie. So Kate is Kate Welsh. I have a Katie Welsh and a Kate Welsh. So they are here from Citizens Bank. They came to see us last month, and they actually did a special financial aid presentation for our seniors, understanding how to read financial aid letters. And so it was really good. So here tonight, they're going to talk to you about all the basics, because you guys don't care about everything else that I talked about. You want to hear about the money. All right, so at this point, I'm going to turn it over to Asamase. And again, if you guys have any questions, you can feel free to put them in the chat as we go along. So the floor is yours, Asamase.
All right. Thank you, Ms. Mitchell. And hi, everyone. Like she said, my name is Asamase Ekatar, and I'm a high school relationship manager for Citizens. We also have, like you mentioned, my amazing co-host, Kate Walsh. And overall, this session is designed to help families like yourself, right, by providing information to help you make informed decisions when it comes to understanding, the financial path leading to college. So before we get into today's session, if you have any questions, please feel free to put it in the Q&A box, and we'll be happy to answer those questions at the end of the presentation, or even at the end, you can take yourself off mute. All right. And for some background information on myself, and I think back to the end of my high school journey, I remember that this time was tough. And when Miss Mitchell told me about the purpose of these presentations, for first generation students, it really did resonate with me. I was a first generation student. My parents and I weren't really familiar with the FAFSA process, and I didn't have amazing counselors like Ms. Mitchell, I'm currently providing with that much help. And so I felt alone, and I really struggled to complete my FAFSA in a timely manner. But that is why I take such great pride now in being able to provide families like yourselves with the knowledge that I wish I had back then.
Now, with this being my second year in student lending, these workshops are really one of my favorite things to do because during my senior year of high school, I wasn't really aware of everything that goes into understanding, financial aid in general. So our hope is that after tonight, you have 2 or 3 key takeaways so that when it comes time to apply for college and that financial aid, you all feel prepared.
Awesome. And with that being said, we know that college can be scary, it can be expensive, but it truly is a great investment. We know that statistically, college graduates earn 67% more than non-college graduates. So before we start today's presentation, we just wanted to at least tell you that, and hopefully you can see the value within your journey for higher education. And more importantly, we're here to help you achieve those goals. So without further ado, let's go through today's presentation and some of the topics we're going to discuss, right? First one is, what exactly is financial aid and how do you start the process of accessing your financial aid? Then we'll go over the financial aid offer letter as well as what happens after completing the FAFSA. And then we'll talk about how to close your financial gap and then end off with how can citizens help.
So let's start off tonight by talking about the actual definition of financial aid. So financial aid, that's any money that's provided to both students and families to help pay for a post-secondary education. And when we say post-secondary education, it's really just a fancy way to say college or university. There's a common misconception out there that all financial aid is free money. That's not the case. Some financial aid is free, but other forms must be worked for and even paid back. And with that being said, most students are going to use a combination of scholarships, grants, campus-based programs like a federal work study, and loans to pay for their education because it is such an investment in their futures. Now we'll have plenty of time to go into detail, but briefly, scholarships, that's free money, it's not paid back, and it comes from a couple different sources. Then there are grants, which are another form of free money that are awarded on the federal and state level, and those are normally not paid back. Then there's the federal work study, which is a campus-based aid program that allows students to work for funds. And then loans are funds that have to be paid back once a student graduates or leaves school, and those are available to both students and parents.
Awesome. Now let's discuss the actual process of accessing your financial aid. All right. So the first step in that process is to apply, for FAFSA, which stands for Free Application for Federal Student Aid. Now, FAFSA is free, so students and parents should never be required to actually pay for completing the application. And it is fairly easy to navigate, at least these days. But if you ever have any issues like my family did back when I was applying for financial aid, there usually is free help available to you. Now, you can start to fill out your FAFSA as early as October 1st of your student senior year in high school. And so that October 1st date is super important because once the FAFSA is opened, you want to make sure that you're filling that out as soon as possible because the earlier you apply for financial aid, potentially the more money you could earn through things like grants. And we'll talk more about that in a couple of minutes. And there's 3 ways to complete your FAFSA, right? That's mail, over the phone, or online, either on the website or the My Student Aid app. And as you probably could assume, right, the online form is the most common and easiest way for families and schools to process. And so you could process that online at www.fafsa.ed.gov. And also to start, students and parents must create individual FSA IDs. And you could actually do that as early as August to be prepared for the early FAFSA filing in October. Now, the reason behind this FSA ID is that it serves as a signature to sign the online document. And another reason why students and parents each need their own ID is because there's 2 separate portions to the FAFSA. Now, the application, it tends to take about 1 to 1.5 hours online. And as I mentioned, I think it's gotten fairly easier to navigate these days. And so after filling out the FAFSA, right, a student aid report, otherwise called SAR, will be created and sent to your prospective schools that were listed onto your FAFSA just to determine how much and what type of aid they can offer to your student. And then families can add up to 10 schools that they're considering onto the FAFSA application. And after a school, receives the application and fingers crossed, the student is accepted, they'll then deliver either through mail or electronically what's commonly referred to as a financial aid offer letter, which we'll also talk a bit more about in a couple of minutes. I just want you all to keep in mind that the FAFSA has to be completed every year a student is in college, just so that financial changes from year to year can be considered. Now, next, I'm going to show you a screenshot of the actual FAFSA website. And as you can see, right, it easily leads you through the steps, whether maybe you're starting a new application for the year or even continuing a FAFSA you've already started. And something I want you to make note of is that, FAFSA uses the prior year tax information to determine aid. So what does that mean? Let's say, for example, 2019 taxes, right? That's what's going to be used for the 2021 to 2022 school year. And basically this allows the family to know their financial options earlier in the decision-making process. Now, the FAFSA also offers an IRS data pulling tool, which allows students and parents to input their tax information onto the application. And I love this feature. I think that it makes the process much easier, and it overall just helps to avoid any discrepancies since it is coming directly from the IRS. Now, lastly, there is a phone application for FAFSA that's called the My Student Aid app. Once again, that's the My Student Aid app. It's a great tool. However, the IRS tool is not available on the application just yet, but still feel free to use it. Maybe if you don't have access to a computer, or maybe you just prefer to use, applications on your mobile device.
When you are filling out the FAFSA, they're going to ask for certain information to really understand your entire financial picture. So they're going to ask for the social security number or the citizenship status of both the student and the parent, as well as the driver's license number of the student if they have one. And they're also going to ask for cash information. So whether that's a savings, a checking account, any investments like stocks, bonds, real estate, business, farm assets. But they're also going to ask for a record of untaxed income, which would include, child support received, interest income, and veterans non-education benefits. And lastly, they're going to ask for that federal tax information, where that IRS tool definitely comes in handy. But they may also ask for information like IRS 1040s, 1040A, 1040EZs, or any foreign tax returns. So when you are filling out the FAFSA, you're going to be guided with what information is needed on each section, but it's really always best to be prepared with what to expect.
All right, and I know that, and people here are all the documents that they need in order to prepare for the FAFSA. It may seem daunting, may seem a little overwhelming, but, sometimes things happen and you may make a mistake. It's okay though, because we're going to go over at least the most common mistakes. All right, so mistake number one is using the wrong social security numbers when filling out certain sections. And so this is important, for families to be mindful of which section they are on, whether it be the parent section or the student section of the FAFSA application. Right, for parents who may have multiple children in college, you want to make sure that you're using the right child social security number. Okay, and then there's mistake number two, which is entering the correct parental information on the FAFSA. So for married parents, students can use either parent's information. For divorced parents, students must use the information of the parent they live with the most, or the parent who provides the most financial support, which is normally the same parent. And then for remarried parents, students should use the parent and step-parent they live with the most. For parents who are unmarried but live together, students can use either parent's information. Now, if you have a scenario that I haven't mentioned yet, don't worry, it's not the end of the world. Always feel free to visit the FAFSA website, because they have an entire section about which parents to include onto your FAFSA. Then there's mistake number three, which is knowing the correct size of your household. All right, students should use the correct amount of people who their parents support more than 50%. So let's say, for example, a student has an older sibling who lives in the basement, pays rent, is not dependent at all on their parents. Even though they live in the household, they technically wouldn't be counted under the household size. However, if you had, let's say, a grandparent or a cousin, right, that does live with you and is financially supported more than 50% by your parents, they would be considered under your household size. And then in that same vein is mistake number four, which is reporting the accurate number of household members in college. So this really comes into play if both the student and parent are filling out the FAFSA and they're planning on going to school at the same time. Now, the student wouldn't actually include their parents onto this specific portion of the FAFSA. The parents, however, could include their student onto their FAFSA. And I know that might sound a little confusing, but the reasoning behind this rule is that most parents are financially supporting their child, but the child, in most cases, is not supporting the parent. And then lastly is mistake number 5, which is FAFSA needs certain information on assets to decide eligibility for providing financial aid. So on the FAFSA application, it's important to know that families should not include IRAs, 401ks, or even the value of your family's primary residence. However, you should include any bonds, stocks, or other property your family may own or rent out to others. So, that would include like rental properties or vacation homes. And if you still make any of these mistakes, don't worry. You can always edit your FAFSA after. It's just super important to, be as honest as possible on your FAFSA and do not change any numbers to look better because there can be some penalties.
Now that the FAFSA is complete, for some families that does not mean the process of financial aid is over. So some colleges may require students and families to fill out something called the College Scholarship Service, or the CSS profile for short, to create a more comprehensive picture of the family's finances in addition to the FAFSA. Now the good news is this application is only used by about 300 schools and other scholarship providers, and it's administered by the College Board, who is the same organization behind the SATs. Now, private colleges and universities, they look at different factors that may contribute to paying for college, whether it's your specific cost of living or maybe money a family previously spent on an education. Now, unlike the FAFSA, it's not required by every school, and it's going to allow the organization to see if there are any institutional funds they can offer to the student, in addition to any financial aid given by completing that FAFSA. Also, unlike the FAFSA, it's not free. So the first application is $25, and every application after that is $16. And it tends to take about 45 minutes to 2 hours to complete. So you can always double check on the school's website as well as a CSS profile website to see if this is needed. And if it's not, don't worry about it. You can move on to the next step in your college journey.
Awesome. Thank you, Kate. So now that your FAFSA and CSS profile is complete, what are the next steps? And you might ask yourself, how is your information being used? Well, basically all of that financial information that you provided, it's going to help the school determine what your family's expected contribution may be. Now, expected family contribution, or in other words, EFC, is the measure of a family's financial strength to pay for a year of college. And that's calculated with the formula that we have on our screen, right? That's tax and untaxed income, benefits, family size, and family members in college. And then lastly, assets. And there are some common misconceptions about EFC, right? For example, families need to know that the EFC is not the amount your family has to pay. It's not the amount that your student will receive, nor does it change even if they go to a different school. Instead, the EFC is part of a bigger formula to help determine financial need. And before we even get to that formula, Kate's going to spend a little bit more time talking about cost of attendance.
Absolutely. So your cost of attendance, that's typically made up of tuition, room and board, books, transportation. It's the amount of money it will cost to attend that specific school. So for all schools, there are some direct costs as well as indirect costs. So your direct costs, those are going to consist of tuition, room and board, and those are usually set in stone, while your indirect costs, like your transportation, miscellaneous, books, supplies, those are going to be dependent on other factors and can change at any time. So you may sometimes see loan fees, study abroad costs, and other care expenses included in cost of attendance. But again, that's going to be dependent on the school. So you can kind of think of it as the cost of attendance is the amount of estimated money it will cost to attend that specific school. So the cost of attendance for every school that you apply to or your student applies to, it should be listed on their financial aid website. So you can always double check there to see what their specific breakdown may be. Now, the student's financial need, that's going to be calculated by subtracting the expected family contribution that Osamase was just speaking of from the cost of attendance. Now, every school's perspective on the student's financial need, it's going to be dependent on certain factors, so it's very possible for students to have a higher financial need at one school compared to the other. So, schools are going to take a look at this financial need to determine how much aid they can offer to the student. Now, the total aid that's awarded to students, it can't exceed what their financial need is, but some schools may be able to cover the cost entirely. So let's take a look at an example to really understand what those costs may mean. Awesome. So as you can see on the screen, here are some numbers that can really tell the story of a student who applied to a few different schools. Then they all have different costs of attendance. So private, state, and other community colleges, they all have different costs associated with them. So in this case, it's considered the variable element in the financial aid formula. Now, based on the student's expected family contribution, you can see how that translates to what their overall financial need may be. And that's ultimately going to affect the amount of aid they may be eligible for. So keep in mind that the expected family contribution is constant, so it's not going to change from school to school. But it's really important just to understand the cost differences that there may be in private, public, and other community colleges, and that can really help paint the financial picture and help to find the best financial fit for the student.
Awesome. Thank you, Kate. And so let's take a step back, right? Let's look a little high level and look under the umbrella of financial aid. And when we do that, we're going to see two main types of aid for students. That's need-based and non-need-based. Now, need-based financial aid, that's going to take into consideration, any financial information that was provided on that FAFSA or provided on that CSS profile. And that would include aid such as, like a Pell Grant, for any of you that are familiar or will eventually become familiar with that. And then there's non-need-based aid, which is the most familiar type of aid. And this kind of aid, it looks at other areas like athletics, academic performance, or just other particular fields of study. All right. And so now let's discuss the concepts of your actual financial aid offer letter. So after all of these calculations and added aid, financial aid offer letters are usually sent out, in the mail or electronically. And this part is important, right? When I say electronically, that's either through the student school portal or email. So be on the lookout for that. And that usually takes place in late winter or early spring of the student's senior year. So these offer letters, they inform students about how much financial aid they will receive, but they also make students aware of the unmet need. Now, unmet need, right, that's often referred to as the gap, and this is the money that a student must come up with to pay for college. So as you can see on our screen, we have an example of what a typical letter may look like. Yours may look a little different, but you can see that, they should have the total university charges on there. Once again, also known as cost of attendance. And in this example, the cost of attendance is $49,192. Now, this financial aid package is made up of a scholarship, a couple of grants, federal work study, and federal loans. And the aid that's given to the student will then be subtracted from the school's cost of attendance, leaving the student with a total gap of $26,292. And once again, right, these are the funds that the applicant will have to cover in order to attend this particular university. And so as I say all of this, it is super important to keep in mind that the award letter is just for 1 year of school. And it may change in subsequent years, whether it be based on grades or just other financial factors. And many students may see their cost of attendance number and imagine it as, let's say monopoly money, right? But it is important to know that any financing gap is something that will have to be paid back. Now, a loan that is also in this example and may find itself in your own financial aid package is a Direct Plus loan for parents, meaning the loan is in the parent's name and they are responsible for repayment, not the student. And so while this resource, it can be used, you also want to carefully consider it alongside other options. And we'll discuss those further later on. But the last thing I want to bring up on this offer letter is the federal work study award that was added onto it. So as Kate mentioned earlier, right, federal work study funds, those need to be earned through employment. Hence, this offer letter is showing that the student is eligible for work study and the amount of money that can be earned through this job is $1,800.
So let's start off by talking about scholarships. So scholarships are awards that are given to students that they do not pay back. It is the best type of financial aid for this reason. They can be based on academic performance, need, skills, and even sometimes unique characteristics. Like there are scholarships out there for students who have natural red hair, who are really good, with computer science. Maybe they can even juggle. There are scholarships out there for every student. But you want to keep in mind that certain scholarships should have stipulations, and they will be outlined when the student applies, whether it's playing a particular sport or maybe keeping up a grade point average. And it's the amount that's awarded for each scholarship, it's going to range depending on the source. So a college or university may be able to offer an annual scholarship of, let's say $15,000. But a smaller private organization may be able to offer a one-time scholarship of $500. No amount is too small because there's no limit to the amount of scholarships a student can apply for. And most of the applications are just a variation of a college essay or a supplemental essay they're already going to write for their applications. I mean, they've done all the hard work. They can take those past papers and tweak them to fit their requirements. Taking as little as 10 to 15 minutes every day after school to apply for scholarships can literally pay off for students. And millions of dollars go unclaimed because students just don't know where to search. So you can see on the screen here, there are a couple different sources like American Legions, churches, and other local clubs. But if you want to look online, some great websites to use are FastWeb, Unigo, and Naviance. But while students are looking online for scholarships, they should be aware that there are some scams out there. So they should never have to enter to win a scholarship. If it sounds too good to be true, it most likely is. So they can always check with their amazing guidance department to see if a source is credible, or maybe even find some of those local scholarships as well.
Awesome. And so as there's scholarships, there's also grants. And grants are similar because they're, another form of money that normally does not have to be paid back. And some grants are need-based. So that means that not everyone is going to qualify for them. They come from a federal or state level, and they make college more accessible basically by just helping those who need help meeting college costs. And once again, one federal grant that you may eventually become familiar with is a Pell Grant. But in order to be considered for any federal grant, you will need to fill out that FAFSA. Now, just keep in mind that most of the federal grants are on a first come, first served basis, which is, if you think back to earlier when I was saying, you want to fill out your FAFSA as soon as possible, that's the reason why. Because once all that money is gone, they don't replenish it. So once FAFSA opens, once again, that's October 1st of your student senior year in high school, you want to make sure that you do that as early as possible. All right. Now, one thing that many families usually don't realize when it comes to private universities is that they are able to offer other forms of grants to help cut the cost of college tuition. And so these private grants are not always even based on financial need. So overall, when exploring for colleges, please do not get shocked by the sticker price. There are some private schools that can offer these grants to make the cost just as affordable as state schools. And as I say that, you want to be aware of state deadlines because they can be different for each school. So always make sure to double check on the specific college's financial aid website as well as the FAFSA site.
Okay, so let's break down federal work study. So federal work study, that's a common form of campus-based aid that the student does not pay back. But the major difference that the student has to work for the funds, they're not just gifted to them. So essentially, you can think of it as a student working a part-time job during college to earn some extra money for any of their college expenses. So there's one specific question on the FAFSA that asks if a student wants to be considered. Answering yes, it's not going to guarantee they'll be awarded the program, but it will put them into consideration with all the other applicants. But it is important to note that not every school participates in a federal work study program, so it is very possible for a student to receive different awards for each school that they have been accepted into. So, a student who receives this type of financial aid, they can work up until they reach the amount of their award. So if we think back to the previously offer letter slide, so if a student receives $1,800 in federal work study money, they can work until they make that $1,800. But because this program is a need-based type of aid, not all students are going to qualify. And even if a student does qualify, they're not guaranteed a job. So they'll still have to go through the search process, applying, interviewing, really treat it as a real role on campus. But it is a great way to kind of earn some extra money for their expenses and put something on their resume.
Awesome. So federal loans, I know that when we see those words, we we cringe up a bit, and they may seem complex, they may seem scary, but don't worry, I'm gonna break it down today. So as we know, federal loans, they must be paid back with interest. And we usually actually tell undergraduate students to exhaust their federal direct loans first because they do have certain benefits, whether that be like low interest rates or just flexible options for repayment. And the only way to be considered for a federal loan is, you guessed it, you need to complete your FAFSA, right, every year. So there's two types of federal loans that are currently available to students, and that's direct subsidized and direct unsubsidized. So if a student qualifies for these loans, they will be automatically included onto the offer letter. And don't worry, I'm going to break it down. The basic difference between the two is that direct subsidized loans, is being paid by the government, at least interest-wise. And not all students are going to be eligible for direct subsidized loans. Only those demonstrating financial need will receive them. And it's also important to note that the U.S. Department of Education pays the interest while a student is in school, at least at a half-time rate and 6 months after the student leaves school. And if a student receives a direct unsubsidized loan, they're going to be responsible for the interest of the entire life of the loan. I know that might sound scary, but don't worry. One way that students can actually lower their cost of repayment after college is to pay for the interest while they're still in school. And that's actually easy to do these days. It's easy to stay up to date with all of your interest on each of your loans. You can use that My Student Aid app that I mentioned earlier, and it'll show you how much is due. Because, to be honest, paying as little maybe as like $20 to $30 towards your interest every month while you're in school is gonna help reduce the payments once you graduate.
All right, so let's talk about a few ways that you can fill that financial gap after you've exhausted all of your free aid or any other aid you may have, like savings. So one option that students and their families can use to pay for their college education, it's called a tuition payment plan. So a lot of families don't know about this. Essentially, it's paying the tuition bill on a month-by-month basis to avoid taking out any loans. And next to using savings or paying entirely in full, this is typically the least expensive way to finance college because it is interest-free. And tuition payment plans, they usually last the duration of the school year, so anywhere from 8 to 10 months, and they offer those interest-free payments. But some schools have fees and finance charges, so if you are interested, you can always ask the financial aid office about that. So if we look at this as an example, this student owes $17,000 for the school year. With the school's payment plan, they have the option of paying a little over $2,000 each month. And while that is a lot of money, if a student or a family can't afford this, it may be one of the least expensive ways to pay for school. And you can even work directly with the financial aid office to pay a portion of your tuition using a payment plan. So let's say you can budget, $200 a month, and that works for you. That's going to cut down on money you're going to have to finance elsewhere. And we've mentioned this a few times throughout tonight, but there is a Direct Plus loan for parents where financial need is not required. Federal loans, they have great benefits for students in terms of their interest rates and repayment options, but they're not as robust for the Parent Plus loans. So they have a relatively higher interest rate and a significant origination fee. So in other words, if you take out a $20,000 loan, it's not going to be $20,000 once it reaches the school. So you have to borrow extra or even pay out of your own pocket to cover those fees. But it still is a viable option for parents who want to help and who may be challenged with a poor credit history or a high debt to income ratio. And the reason we point this out is because some schools will actually package the Parent Plus loan into the offer letter to make it look like a scholarship or a grant. But you want to keep in mind, it's not free money. It's a loan that parents pay back, not the student.
Mm-hmm. And so now let's say you've squeezed every penny out of those federal loans that Kate mentioned, right? Let's say you've applied for all the scholarships out there. Let's say you found out how much money you're making in grants, yet you still find yourself in a funding gap. And so you might be asking yourself, now what? This is when families should then consider private loans, which are sometimes referred to as alternative loans. And these are offered through private lending institutions such as banks, right? So a borrower's private loan rate, it's based on their credit worthiness, whereas federal loans are not. And private loans are available to both students and parents. You just have to decide, which one is best for your situation. And so you might also ask yourselves, why private loans? What are they, right? Not only can private loans fill a gap, after you've exhausted all your other funding options, but they also offer varying interest rates, repayment and deferment options. And something else to note is that due to credit and income requirements, students are often encouraged to have a cosigner when applying for a private loan, just to increase their chances, right, for approval. And the student or parent is going to be responsible for all the interest that accrues on those private loans. Now, there's also private loan options for parents who may want to finance their children's college education in their own names. And private loans, they can also help avoid origination fees, as well as help students build credit by giving them a certain amount of financial responsibility. Because once a student graduates and begins to pay down their student loans, this is only going to help them strengthen their credit portfolio. Now, as a borrower, you can select any private student lender of your choosing. If you are undecided or would like help selecting a lender, a good place to begin with, it's usually your school's financial aid office. They usually do have a preferred lender list that they can provide for you.
So like Osamse just mentioned, if you're not sure where to start, a good place to begin is with that financial aid office, just to see if they have a list of reputable lenders that have the best rates and benefits for students to use that they have to offer for them. But if you are considering a private loan, there are some factors you might want to consider. How long has a lender been around? Have they been in the news recently for something good or something bad? What's their overall reputation? Now, one of the most important things are the terms of the loan. So how long will your student be paying off this loan for? Do they have any deferment in case your student goes back to school, or maybe they have hardship once they graduate? For parents on the call, do they have any opportunity for cosigner release in the future if you're going to help out your student? But you also want to look at the interest rates. So do they have fixed and variable? And these are all questions and factors you might want to consider when you're looking for a private loan to help bridge that gap in funding.
And one key word that we've been mentioning throughout the presentation is credit, right? And credit is something that's going to affect the private student loan that the student or parent will be eligible for. Now, I'm sure we all know what credit means, but just for formalities, right? Credit allows you to purchase a good or a service, and in lieu of immediate payment, allows you to pay it off over time. Now, a student's credit score can not only affect the rate of any loan they will receive, but, it can also impact other areas of life, such as, where they want to live, right? Many landlords will actually check your credit score to gauge your responsibility as a potential tenant. And credit can also influence future careers since, surprisingly, some companies do look at applicants' credit scores, once again, to gauge their level of responsibility.
There are certain steps that students and families can take to start building credit in a responsible way. One of the first steps to take is to actually take a look at the credit report to see where you stand. So even if you or your student, you don't actively building your credit, you still have a score. It's important to understand what that score means so that you can take the time to fix any discrepancies that you uncover so that you can either slowly build or even rebuild the credit in a responsible manner. One way is using a credit card, but students can also look into using a secured loan or a secured credit card. Essentially, they can pledge a certain amount of savings and the lender will put a hold on that account. So they're basically borrowing against their own funds. And once that loan is paid off, they'll have access to those funds again. But they can, also look into using a cosigner if they are applying for any lending needs. So they can get a better rate if they use a cosigner to really help boost up their applications. But for the parents in the call, one way you can look into helping your student is to add them as a qualified user onto an existing credit card. So you can check with your credit card company to see if they report the new users to the bureau, because that's the only way they can kind of piggyback off of your credit. But when I say this, it does not give a student free rein with a credit card to buy whatever they want, do whatever they want. No, they don't even need access to the card itself. But you want to keep in mind that with this, if your credit goes down or it's affected in any way, it's going to impact the student as well. So just kind of keep that in mind, have an open conversation. But you can also use services like Experian Credit Boost to get credit for any of those monthly payments for the bills that you make. But whatever way makes the most sense for your situation, it really all comes back to credit report monitoring. So you want to be aware and watch for any of those discrepancies, just so you can avoid any issues and really start to see that positive movement in credit, which can help definitely build confidence to reach all the financial goals they want.
Awesome. And a good credit score is something that can save or borrow money in the long run, right? So in this example, we have two students and, let's say they both attend the same school. Let's say they're going for the same degree. They took out the same amount of loans, same repayment period, everything is the same. But the only difference is that one of them had a cosigner with a 780 credit score and the other had a 660 credit score. Now that's a difference of 120 points. And as you can see here, that the student to the left will end up paying over $11,000 more for the very same education. And that's just for 1 year. So, if they were to stay on that same track over the next 4 years, the difference will be as high as nearly $22,000. So that's just to show you how important credit is and how important it is to continue to build it.
Here at Citizens, we're the third largest lender in the nation, and we have more options than any other. But we really want to sit down and take the time to explain the details of what a private loan contains so that when you do start the search process, you feel well informed of kind of what to expect. But before we get into that, I want to talk about our scholarship, which is awesome. So it's our newly launched scholarship, and it's there to boost college funds. So awarding a monthly prize of $2,500 and a grand prize of $15,000, which is definitely a good chunk of change. And the great news about this is that it's open to both students and parents. And the application, it's super simple. We're not going to ask for an essay or check your child's report card to see what they got, in chemistry class. It's all done online, and the application itself is rolled over from month to month, so you only need to apply once. So you can get more information on our College Bound Citizens website at citizensbank.com/collegeboundcitizens, just to get some more information about it.
And on the topic of free, let's just stay here for a little bit. One of our other free solutions is coming from our partner, Edmit. And basically what they do is they help families make smart financial decisions. And so we're happy to share their tools with you. Such tools would be, comparing college prices, calculating the cost of attendance, and even preparing for those tuition bills. And to be honest, usually Edmit users have to pay $90 to $99, I believe, to access these resources. But through Citizens, we're happy once again to provide this all to you free of charge. It's on our website, so feel free to take a look at that. All right, and so we're going to get to some of our solutions, like Kate mentioned, so that you have an idea of what a private loan looks like. So we offer two solutions to help families pay for an education that works best for their situation. And so that's a student loan and a parent loan. Now, a student loan is where you guessed it, right? The student is the borrower. And something to make note of is that, most private lenders will require a cosigner when lending to a student. And students will have the choice of fixed or variable rates, as well as no origination, application, and disbursement fees. And borrowers who have a Citizens account already, can actually get a loyalty discount of 0.25% rate reduction. And you can get an additional 0.25% rate reduction if you enroll in simple, like automatic payment deduction. Now, another option we offer is the student loan for parents, right? And this has the same benefits as a student loan. It's just that the sole borrower is a parent/sponsor. And with this loan, a parent, grandparent, or any sponsor can borrow on behalf of the student. And once again, we offer fixed and variable rates, as well as varying terms, depending on the needs of our borrowers. And so as a reminder, the Federal Plus loans, they have fees that are deducted from the loan proceeds. And so in simple terms, let's say that if a family needs, $10,000, right? That means that they must borrow more than that just to cover the origination fees when it comes to Federal Plus loans. But here at Citizens, we don't have any disbursement or application fees. So the amount that you apply for is the amount that will get dispersed directly to the school. And we know that, around this time of the year, many families are worried, right? They're worried about their ability to secure financing each year through graduation. But with our multi-year approval offer, we love to give families, the peace of mind of just knowing that they have the financial resources to see them from orientation to graduation. And to be honest, typically this is an annual process, but here at Citizens, we're made ready to make it simple, right? Approved borrowers have access to a simplified, streamlined process to request funds in subsequent years with no further documentation required or even hard credit pulls required. And so I love this, especially the fact that families just need to complete a request for the loan amount needed each year, as long just to see that it's within the student's cost of attendance.
And when families look at options to fill that funding gap, a lot of times they consider the PLUS loan or private loan. So let's break down the cost difference of both options just to see what the long-term differences between the two are. So with the Federal PLUS loan, they have a relatively higher interest rate and a significant origination fee. So in other words, when that loan is sent, they take a certain amount of money from it. So for this loan in particular, you're going to automatically be losing $634 of that loan amount to origination fees. So you may have to borrow extra or even pay out of your own pocket to cover those. But ultimately, you're going to be paying almost $6,000 in interest over the life of the loan. And if we break down the private loan here at Citizens, there's no origination fee, so there's no need to borrow extra. And even at the highest interest rate, you're still going to see a savings of over $1,000 compared to that PLUS loan. And based on your credit, you have the ability to save more than $3,900 in interest by just using a private loan compared to that Federal PLUS program.
Awesome. And in addition to providing solutions to help students and parents finance an education, we also have solutions to help borrowers manage their student loan debt, right? Debt is a big topic in today's world, and refinancing is an option. For those who are not familiar with refinancing, basically it can help lower your interest rates. It can reduce your monthly payments. It could even fix a variable rate, and also remove a cosigner to gain financial independence and control. And for the parents on tonight's call, you may be paying multiple, high interest loans for, let's say, multiple children, in addition to your own student loans. But with a Citizens Education Refinance Loans with Parents, you could refinance all of these loans into one convenient monthly payment, even while your children are in school.
And one of the great ways to qualify for that loyalty discount is with the Citizens Bank student checking account, which is made ready for students. So there's no monthly maintenance fee or minimum balance required. So it doesn't matter if the student has $10 or $1,000. As long as they're under 25 years of age, they're not going to get charged for having a low balance. And we also offer online banking, which can help students deposit checks right from their phone, which definitely comes in handy when they don't want to leave their dorm rooms and maybe grandma sends them a check for getting an A on their first final. And if they ever have any questions or want financial advice, they can always go into any branch and speak directly with a banker, because we're made ready to help you. Pulling an all-nighter, that's tough, but banking doesn't have to be. Now, we also encourage you to visit our College Bound Citizens Journey Hub, and that's at citizensbank.com/collegeboundcitizens. There are a wealth of resources to help start the financial literacy journey from high school, college, and beyond. We have some great tools, some videos, some quizzes to really help you understand the entire financial path to school. So you can check out our financial aid offer tools, tips on how to optimize your scholarship search, and even videos on our live series to really help you continue the journey. So this free hub is a great place to start when exploring, really to understand how to budget, how to save, how to build credit, and overall have that strong financial health through college and career.
Awesome. Thank you, Kate. And so overall, we know that we threw a ton of information at you. Financial aid, it can be hard, but we hope that you feel that, we can help you through it. We have over 40 years of experience in student lending, and we're prepared to help you whenever you need it. But, another amazing resource is going to be the college's financial aid office, as well as your high school counselors. Ms. Mitchell is amazing at what she does. So we always encourage you to speak with them to help answer any specific questions, or anything that's regarding maybe some special circumstances. But the important thing to remember is that although there are so many considerations and options to funding a college education, you're on the path to making educated decisions that are right for you. And we're ready to help you along the way. So thank you for joining us today, but really thank you for letting us join you on your journey. All right. And so that is today's presentation. Ms. Mitchell, I'm happy to open it up to any questions, or if you had any other thoughts you wanted to add in.
So thank you guys so much for coming. You guys always do a great presentation. This is the third presentation that they have done with our school. I did have a quick question as far as what is an origination fee?
Yes. And I'll let Kate take that because I know she had mentioned it in depth on this slide.
Yeah, absolutely. So origination fee, you can kind of think of it as a fee for getting the money sent to the school. So they charge a certain amount so that you'll lose that amount when it gets sent to the school. But that's really just with the federal loans. A lot of private loans, they don't have those origination fees. It's really just with the federal program. So you could think of it as it's just getting sent to the school, so you'll never see that money.
So basically, if you were to request, let's say like $10,000, at least for a private loan, that's going to go straight to the school. But if it was a federal loan, you would have to ask for more than $10,000 because you have to incorporate that origination fee. Does that make sense?
Mm-hmm. Does anybody else have any questions about that? Because usually in the financial aid presentations, that's one of the most asked questions, and sometimes people don't even talk about the origination fee. So that's good. And then can you guys give a little bit more information about the Federal Direct Plus loan, like where it comes from and what the difference is between a private loan? Because that's another source of questions with people too.
Yes, I'm going back to that slide. Oh, I may have missed it.
I can start it off. So with the Direct Plus loan, so that money is coming from the federal government. So a lot of people think that, no, it's kind of similar to a student private loan, but they don't have the same benefits to offer. So you're paying that origination fee, so you're losing that money, and there's usually a higher interest rate. Really, a lot of families, they'll qualify for that Federal Direct Plus loan because they don't really take a look at your credit. So that's why there's so many fees associated with them, just to kind of cover their bases. But then if you look at the private loan, that comes from lenders like banks, and that's going to be based on your credit. You'll get a different interest rate, so it can help save money compared to those fees. But they're both viable options for any parents who want to help students.
And Ms. Mitchell, another thing too with Federal Direct Plus loans, and Kate may have already mentioned it, but sometimes they're on those financial aid offer letters, and they may come off as a way of free money or scholarship or things like that, because sometimes they're not even named Federal Direct Plus loans, and so you want to be careful of that. You want to make sure that, okay, this actually is a Federal Direct Plus loan. It's money that you will have to pay back, and just be careful of it, because like Kate mentioned, it can be a resource, but if it doesn't fit your situation and you could potentially get a cheaper option to a private loan, you may want to consider that. You can always tell a school, hey, I don't want this loan. And it's the same thing with all the other loans as well. So as long as, families are informed, I feel like they're going to do the best with that kind of scenario.
So we have a question in the chat. A student asked, can you go back to the Citizen Scholarship? And then I can also drop that in the chat for you guys again too.
Yes, our amazing scholarship. I am obviously biased, but it is so easy to apply for. It takes probably less than 5 minutes. Like Kate mentioned, we don't ask for any essays. There's no survey. We don't need your grades. It's really easy to apply for. And not only can students apply for it, but also can parents as well. And I've been asked in the past, can I apply for it and my parent apply for it? Go ahead. I didn't see anything. So, it's double the chances. Just once again, quick and easy. And once you apply for it, you don't have to reapply for the monthly prizes. Your name will always be in the running for at least the $2,500 prize. And then at the end of our scholarship season, there's a $15,000 prize as well. So feel free to apply for it. And also, look at other scholarships. It's never too early to apply for scholarships. There's no max on the amount of scholarships you can apply for. So definitely, you want to keep your eyes open for that.
So there's a question in the chat that says, what kind of account would parent or student have to have at Citizens Bank in order to get the 25% discount on the private loan to either the student, the parent, or the cosign loan?
Yes, great question. So it could be any Citizens account. We usually show our student checking account just because it's a simple, easy one for students to apply for. But really, if you have any other, whether maybe you have another loan with us, and that could be any loan, student loan, mortgage, whatever it may be, any other account with Citizens will apply. Kate, is there anything else you want to add to that or clarify?
No, yeah, no, any account will qualify for that discount. So even if it's a student checking account with $5 in it, you can still get that 0.25% off.
And also that automatic payment discount. So basically, if you set that up, that's another 0.25%. That's easy to do, and it's just basically taking your money on a monthly cadence. And so also, you know, you want to set that up as well. It's another 0.25% that you can get taken off.
So another question in the chat says, I'm sorry, the person who asked that question, did you have any more questions about that answer, or was it answered for you? Okay. She said, that's good. Okay. When completing the FAFSA, after you fill out the FAFSA, do you automatically qualify for grants, or is there another form or application?
Great question. No, so when you fill out the FAFSA, that's when the grants will come to you. So it's a little different from a scholarship, where most scholarships you have to apply for them, at least external scholarships. But when it comes to grants, all you have to do is fill out that FAFSA. That's the most important piece of it. You want to do that as soon as possible. So if you're not a senior yet, just keep that October 1st date in your head. And if you are a senior and you haven't done it, make sure you get on top of that. But you know, that is what leaves you for consideration for grants. And grants, most grants are need-based. So not everyone is going to qualify for them. And that's one other thing that you also have to keep in mind. But private schools tend to have grants that maybe are not based on need. They just more so want to make sure that you have enough money to you know, attend their school. So I would always recommend talking to the financial aid office if maybe you didn't receive a grant, or maybe the grant that you received is not enough money. Have that conversation with them, just to tell them your situation, and maybe they can come up with more grant money or scholarship money or whatever they can do to help your financial aid profile. It's always a conversation worth having.
So you guys are asking some really great questions. And there was a lot of good information here that was, you know, broken down very essentially for students and parents. So do you guys have any additional questions? Going once, going twice.
You do have one question. Yep.
There's a question. With your private loans, does the money you get, does the money that you get with the loan get sent directly to the college or to the parent?
Great question. I believe the money goes directly to the school. And that is why, at least when it comes to our private loans, we have the multi-year approval offer. So that way, once you've applied for your private loan with us and you fit that those requirements, you won't have to keep reapplying every year. You'll automatically be set for the rest of the years that you're in college, undergrad. And basically what you will need to do is just tell us how much money you need for the semester, and then the money will be sent over to your school. It would just bypass you. That's at least with Citizens. With other banks, not everyone has multi-year approval, but I think private loans in general usually go straight to the school.
There's a question, what if the student transfers? I'm thinking from one college to another, possibly with the private loans, the same person.
Great question. It's just, once again, a conversation you'd want to have with your bank. I'm sure they can make that change. Or yeah, with the bank that you do the private loan with, I'm sure they'll make that change. Just make sure that, you know, you want to pay attention to the deadlines and the scheduling of when you have to start to pay your tuition. Usually 2 weeks before that tuition bill is due is where you'd want to get on top of your private loans. So, you know, if you know that your student is transferring pretty soon, or maybe, yeah, they've already gotten their acceptance to the new school, at least 2 weeks before, you know, they actually start the semester, you would have that conversation with your bank if you haven't already.
And I wanted to offer you guys a suggestion. I'm going to put a link in the chat. And the link that's in the chat is for something called the Net Price Calculator. And so the Net Price Calculator is a tool that you can use every college now. by law has to have this on their website, but the one that I'm giving you is the one to the federal government. And it will either go to that school's website and pull it up, or you can use the one on the government site. And basically what that will allow you to do is to do a kind of rough estimate of how much money in grants and loans you think you will receive from the college based off of your income. So for you guys here that are underclassmen, this is like the perfect time for you to do this, especially if you think that your salary pretty much stays the same every year. And so that way we can start to strategize to see what types of schools you should be applying to. Just like earlier in the presentation, they talked about needs-based versus merit-based scholarships. And so colleges are also set up that way. And I'm not going to go too deep into it because we're going to go into that into another presentation. But for those of you whose income is higher, and when you do that check and you see that you're not eligible for certain grants and certain loans, then we can look at certain types of schools, and vice versa. If there are students whose incomes are on the lower end, we can look for some more needs-based types of schools. And so it's very important for students and parents to have open conversations about how you're going to pay for this. So I know it's none of your students' business as to how much money you make, but you guys need to start having some conversations about maybe how much money is saved and what kind of a budget that you have to pay towards college each month. And so there have been some senior parents and junior parents that have made appointments with me, and we've sat and had some conversations. And then if the conversation is really deep, I have another reference to give you guys, our FIA person that's in charge of those FIA and FAFSA applications for the federal and state grants. And so you just want to make sure you have the conversations, because the last thing that you want to happen is this time of year when you get those financial aid letters and you realize that you can't afford to go to some of those schools. It's one thing if you know that ahead of time and you can kind of try to problem solve and make it work, as opposed to now it's going to be really hard to try to make those things work. Not impossible, but it's going to be really stressful. All right, so make sure you look at that net price calculator. All right, so are there any other questions before we close out? Going once, going twice, going 3 times. All right, we just like to thank Kate Welsh and Osamase Ekatar for coming in and giving us this fabulous presentation tonight. The presentation was recorded, so if you guys want to go back and watch it, and of course, if you guys can drop your any of your information in the chat if anybody wants to reach out to you directly, so that you guys now are here early enough that you can decide and do some research to see if you want to take that PLUS loan, if you want to take a private loan from a bank, or there's another loan called the PA Forward loan, which will come up in another presentation. But it's best for you guys to start asking these questions now. All right. So on that note, we wish you guys a good night and thank you so much for coming.
Thank you.
Thank you.